Technology Think Tank. My name is Colin White from Credit Connect Media. Hope everybody is well. For those of you who viewed our sessions earlier, we hope you enjoyed them. We'll be looking at your feedback later in terms of the polls that we've shared. So hope you've enjoyed that of the event to date. We're moving on to our last session of the day now, where we're going to look at new generations in lending, and we've got a very dedicated panel who's joining us today. I'll hand over to Chris to announce and show you through who's with us today. But I just want to highlight this session is sponsored by Alvaria, who've very helpfully helped to promote and share this event with their audience. So we'd like to thank them for being a sponsor. And we've got today a special mention. There's a birthday, Jason Wassell from CCTA. I think he wants the audience to sing happy birthday to him potentially. So if you can do that as an audience, that would be awesome. But I'll let Chris lead the proceedings on that. I'll hand over to Chris Warburton now from RO Strategy, and he'll start the discussion and the celebrations. Chris, over to you. Once he's off mute,
you're on mute, Chris.
Hang on, the technology conference. There you go.
Oh, there you go. For a moment, then I thought, I thought you're going to ask me to start leading the singing, which is what I was doing, and of course, when I was on mute. So you've missed it. I'm sorry, but happy.
Yeah, no, it's good.
So thanks, Colin. Right. So final session of the day. Thanks very much. So for those of you who weren't on the previous sessions, my name is Chris Warburton. And I'm going to be the chair for the event. So from moderating the conversation. So a little bit on my background very quickly. So I spent the last sort of 20 odd years really in risk operations, which is everything from origination through to fraud, credit collections, really looking at processes across the customer life cycle. The last little while I've been sort of also running RO Strategy, which also we're doing a series of videos basically looking at innovation technology in the credit collections and that sort of customer life cycle space as well. So doing a series of videos on those. So that's a little bit about me. And joining with me today, we've got Jason Wassell, who's the Chief Executive of the Consumer Credit Trade Association. We've got Zach Morrison, who's the Product Marketing Manager for Alvaria. And we've got Tony Gunderson, who's the Head of Operations for Onmo. So I'm going to ask you guys maybe just give it just a very short, brief introduction around maybe what your role is and sort of and your background. Jason, do you want to go first? Or?
Yeah, absolutely. And I think, we've always been happy to play a role with Credit Connect. So some people, I'm sure, will know me from other events that we've done with Credit Connect. But as you said, I'm Chief Executive of the Consumer Credit Trade Association. We're a trade association for alternative lenders and have been for the last 130 years. Alternative lenders tend to be those that have kind of alternative products, those that are outside the mainstream, and kind of that might include things like home collected, high cost short term guarantor, those kind of products that are slightly out of the mainstream, and also alternative customers as well, those that are not served or are not well served by the mainstream, and in particular the banks. So that tends to be our membership in that kind of alternative lending space. We represent about 180 to 190 members. We're going for renewals just now, so that changes every day. And as I said, we're delighted to be here, delighted to work with Credit Connect on this particular event.
Okay, fabulous. Zach, I know it's very early where you are, but maybe just give us a quick briefing.
Yeah, West Coast in the States, it's just hitting 5 a.m. here. So, but hi, everyone. My name is Zach Morrison. I'm a product marketing manager for Alvaria Incorporated, which, of course, was formerly Aspect Software and Noble Contact Center, which merged last year in 2021. Alvaria, for those of you who are unaware, is a CCaaS company or a contact center as a service business. We provide a wide range of solutions, primarily for enterprise-level customers, including workforce management and engagement, gamification solutions to monitor your contact center agents, keep them motivated, and we also provide inbound and outbound voice solutions as well as self-service options on both a premise or cloud platform. I personally am responsible for the marketing efforts behind our premise inbound and outbound voice solutions, which are Alvaria Voice Agent and Alvaria Compliant Outbound, respectively. as well as our premise self-service solutions, which are Alvaria Automated Agent and Alvaria Omnichannel Agent, respectively, plus our cloud solution, which is kind of just the larger umbrella that all of our products fall under. Now, coming from a contact center space, I likely won't have a whole heck of a lot to contribute to the discussion early on regarding lending until we reach the end, where perhaps we can discuss things such as repayment options, perhaps on the collection side, tools such as compliant outbound campaigns and self-service options for repayment. But nonetheless, I'm happy to be here today with all you to discuss these new lending models and trends. And thanks again for having me.
Thanks, Zach. And Tony.
Yeah, good afternoon, everyone. And there was me thinking I'd just been invited to Jason's birthday party, and it's actually a panel event. So there you go. Yeah, good afternoon, everyone. I've got 30 years plus in financial services, ranging from high street banks to high cost short-term credits, and a lot of things in between. Currently working with a startup called Onmo. Our first product is due to go live in the not too distant future, which will be a credit card aimed at the near prime sector. So very excited about that. It's an app-based product, and obviously being a startup, we're taking advantage of as much digitization as we can, without the legacy stuff that a lot of people unfortunately have to suffer. So certainly exciting times for Onmo, and delighted to be asked by Colin to be involved in the discussion today.
Yeah, fabulous. Well, thanks very much, everyone. So I suppose just to start the discussion here, I mean, with all of the recent changes we've seen, I suppose, over the last sort of like 5 or 6 years, it does feel like there's been a huge focus on technology, digital, and it feels like we're on the cusp of some new lending technology that's sort of out there, and it feels like it's starting to come through more and more. And I suppose with the environment that's sitting in the background, a lot of the shocks that have come through the economy might now mean that we now need to use this new technology to react to some of the new environments, new lending patterns. We talked about that on some of the previous sessions around whether the models would work, or changes in society, potential economic changes to affordability, those kind of things. So in this section here, I want to talk a little bit about some of those changes, some of the the changes that there are in the sort of generational changes in some cases, and how to think about that structurally, and then what we do sort of going forward. So to kick off the discussion, I was going to actually go to Jason and just say, do you think we're seeing sort of generational shifts in lendings and our attitudes towards financial services?
Of course, we're always heading down the track, and we're always seeing a new generation of borrowers come in, of customers, and also of lenders. And that's just the passing of time and the change in society. But I think you're absolutely right. There are a number of factors that are in play just now: social factors, technological factors, how they interact just now, and also economic changes, as you mentioned as well. And in an event that's looking at technology, we can see people are much more comfortable than they may have been in the past about online services. There's an increasing expectation that people will operate online, and that's a social change we're seeing, a social change that's been accelerated by COVID and what we've seen over the last few years. And I'm not telling anybody anything new here. Everybody has seen how companies have had to react, how they've had to go online, how there's increased digitalization, new channels of communication, and new channels of service. And I'm sure the panelists will talk a little bit more about that. From an economic position, I think we've also had a strange shakeup in the last few years. Some of the groups of customers that we may traditionally have been worried about actually had a good financial pandemic. And that seems awful to say that when we talk about such an awful event. But there are certain groups of customers that did better than we would normally expect. Public sector workers, those that work for big retailers, supermarkets, paid down their debt, built up savings. Whilst other groups of customers that we would see as a safer risk, middle-class management positions, particularly if they were freelance or consultancy, we'd see them as problem areas, and the whole of hospitality we would see as problem areas as well. So there are definitely economic changes that have kind of been driven by things that we've seen over the last couple of years. And I think the pandemic being so big, the impact of the COVID may, in fact, hide some other social changes that are going on. Before the pandemic, we were talking about that next generation being, were they less interested in assets? Were they more interested in subscription models and service models? And of course, that impacts on whole sectors like car finance. And we've seen some of those changes as more people look to lease cars and look for kind of subscription services rather than buying cars. And what does that mean for whole sectors of consumer credit that have been built up to finance the purchase of these assets? There's some really big kind of dynamics at play, socially, economically, technologically. And we were talking about generations, and you were talking about a generational change. And as I said, I think there's a great deal of uncertainty about what the impact and what the consequences been of the pandemic. But one thing we know is that younger people did not fare well during the pandemic. They didn't fare well from a financial perspective, and didn't do well from an employment perspective as well. And so there are big questions there around, will that set them back? Some of those traditional milestones like buying houses, etc., have they all been pushed back by the pandemic as well? So lots to say there, but I think the next generation of customers may have new expectations. They'll probably have new financial needs. Some of those financial needs will be driven by some of the obstacles that they faced. And so the next generation of lenders are going to have to adapt to that. So hopefully that makes sense.
And Tony, I suppose, what's your view? I mean, do you think it's generational, or do you think it's like changes in habits? So is it an age thing, or is it just like we're in a new environment now as a result of what's happened, and actually now we've got different habits of being able to do things in a different way?
Yeah, I think it's less of an age thing, and because if we look at payments, for example, and how people so very quickly adapted to making mobile payments over the last 18 months, people who allegedly didn't understand what they were, how to go about it within a very short space of time, we're proving how adaptable everybody can actually be. And of course, the mass majority of people have got that access through their smartphone to all of this type of thing. And I think the fact that you've got the big fintechs hanging on the side, your Apples, for example, their recent purchase of a open banking system, and the way you can use Google and Facebook. So I think it's less generational, more sort of how people have been had to adapt over a period. And of course, now we move into a period where people have come out of 18 months of having to cope with different things coming at them, where you've now got even more financial distress, potentially with the ever increasing price rises in fuel and other things. The cost of living are generally going up, whereas actually people's salaries not keeping pace with that, and also pensions not keeping pace with it necessarily. So I think everybody, across the age spectrum, this will have an impact on them. So I think it's more about how people can adapt and access it in different ways.
It's interesting how quickly we've adapted. And I suppose, Zach, just to bring you into the conversation around contact preferences as well, right? So you must see that in terms of like changes in contact preference and different types of contact preference, even things like different times of the day as well, I think. I mean, have you seen that from some of your clients? A change?
I mean, well, the obvious change would be for a period. I mean, in the States anyway, it seems to be going away. Knock on wood, we'll see. But for a while there, we couldn't have face-to-face interactions with anyone. Every retail was shut down, and some of them still are. But again, that seems to be going away. But we've seen a huge growth in the self-service sector, which I think surprises no one. I mean, now more than ever, our clients, our customers want to have those virtual assistants, those chat bots available on their website, self-service applications. They want SMS text capability so they can reach out to them that way. Any way to bridge that gap, to close that, where they once had that face-to-face interaction, they still get that touch with their business.
And what about like new types of lending models? I mean, so buy now, pay later is an example. I know that's come to the US. It's obviously been big over here and in Europe. I mean, is that, and that's a wider example. I think of things like embedded finance. I suppose is really that. So I mean, are we going to see more of that? Do you think these sort of like new? Because I think the digital piece is kind of enabling some of these new lending models to a certain extent. I mean, are we going to see more of that? I mean, what's the view of, is that going to be a growing trend? I mean, Tony or Jason maybe.
Yeah, I mean, I think the opportunities are definitely there. I mean, and you don't necessarily have to reinvent the wheel for a lot of these things. You just have to have a look at what consumers are really looking for, what is right for the consumer, and where is it right for the consumer. So, buy now, pay later in its form at the moment is, to a lot of people seems like a new way of lending, but in reality it isn't. It's a recycled way of lending done in a maybe a slightly smarter way. And even the likes of the bigger players like Klarna are sort of doing it slightly different in the sense that they're now sort of producing a card that says, well, actually, don't wait till you get to the checkout, have something ready in advance, if you like, to enable you to do this. So I think there's going to be other innovations in that area. But I think what doesn't change is, from a lending point of view, is the way you have to ensure that you're doing the right thing in the right way. That's always been, the way things should have been done. So, however, whether it's digitally or wherever, you need to have the necessary processes in place to ensure that lenders get, so the people lending get a good outcome. And that hasn't changed, whether like us, you're an app-based or you're web-based or however it may be. As we've seen, people nowadays, and quite rightly, will try and create a bit of friction in the application process, just to slow it down a little bit, just to make sure that people are understanding what is happening during that process. It's not a sort of race from start to finish and here we go and spend your money. There's got to be a bit more intelligence about that, because the amount of data that's available to us all now, we can use that both as part of the onboarding process and in life of the customer. So as a credit card product that we'll have, we will be making sure that we're making best use of all that data that's available. There's no one pure source. We've got Bureau, we've got open banking, we've got the information we get from customer, we've got all the behavioural stuff that's going on. And I think the winners ultimately are the ones that make best use of that data from the point of view of good decisions, but also then how do you play that back to the customer? How do you sort of be thoughtful about what you do with the customer and making sure not only are they getting the most suitable products, but there's support in other ways for them as well, so that they can be supported as a customer through the whole life cycle and not just a one-off, let's give them something and move on to the next one. I think there's got to be a lot more thought in it.
Yeah. And I suppose Jason's talking a bit about, I suppose, these new financial models, and I think that's a good point, that they're not necessarily new. I mean, they're just reinventions of what we've got. But we seem to have we've got an awful lot of them that are coming through. I mean, do you think there's going to be sort of like fragmentation in the number of relationships we have with financial providers, and can it be too many, or do you think we're just consumers can handle it?
I think it's interesting. I think we talk about innovation, and I think some of the innovation we talked about, there's a point I make to the FCA quite a lot. The couple of areas of innovation that we've seen over recent years are buy now, pay later, and also salary finance as well, advances on salaries. And both of those happen outside of the FCA. And it's a point that I've made to them is I think innovation within the FCA's perimeter is actually quite difficult. And we talk about sandboxes and things like that, but it is still quite a hard process, a difficult process. And I have to start by saying, everybody appreciates there is some innovation around buy now, pay later. We've got to appreciate that because we're a trade association that was founded 130 years ago because retailers wanted a new product, and that product was hire purchase. And so that was the original buy now, pay later. But I think Tony touches on a really important point that anyone who's been a lender knows that where there are friction points, you lose customers. Customers will drop off. At each stage, you will see some fall away. And the great thing about buy now, pay later is that it's embedded and there are very few friction points. But that does raise a question. We need applicants to understand that this is a financial commitment. Now, there's a discussion about whether it's credit or not. I think it is credit, but even so, it's still a financial commitment. And somebody taking on that financial commitment should stop and have a think about that. And they should, and maybe someone else should be looking at that as well and thinking about whether that's a good decision. So from a business angle, and we represent many businesses, we need an even playing field as well. You know, when it comes to this, and when it comes to other products, those many products that you're talking about, Chris, we need an even playing field. If there are certain products that are exempted from certain parts of regulation, then why is that? If buy now, pay later is going to be exempted from affordability, if it's exempt from other regulations, where is the level playing field? And of course, the question becomes, are individuals losing out on consumer protections? If those consumer protections are important, they're important for everybody. If they're not, then why are we applying them to other lenders? So I think there's something there about ensuring an even playing field as well, and thinking about how those protections protect everybody as well. And I think that kind of takes you back to something that Tony was talking about, friction point. Friction sometimes is useful when we want people to make decisions and understand what they're doing.
Friction's definitely coming up, and I suppose just going back to consumer duty, friction versus sludge. Sludge is also coming up as well, which is like taking friction to the extreme, isn't it? But you need to have it at some point just to make people sort of think. So I suppose
I think the customer has to have the opportunity to have things played back to them at certain parts during that journey. Because there is a danger, because there has been a race for speed over a number of years. And there's nothing wrong with giving a good, quick, efficient service, but it's got to be not at the cost of the customer not understanding what they're doing. So I think, from our point of view anyway, is that we want the customer to be engaged in that process and not just a little widget moving through the process, if you like. So I think that's really important.
So one question I have to ask, we might move off this very quickly, but is metaverse. So there's a lot of talk about that, and so what are your thoughts on that for finance, particularly finance and lending?
It's interesting because panelists are always supposed to have an answer, aren't they? And I think it's difficult because there's a big question here about data sharing and how is the population going to react to that. And the metaverse is the ultimate version of that, which is that everything you do is all connected and interconnected. Everything you do online is available. And I think but one of my guilty secrets is that I'm a 50 odd now plus online gamer. So I play online games all the time, and I play some of the big multi member games. I was involved in a battle with 5,000 people online, a war that involved 150,000 people at one point. And I did all of that. It involved technology, it involved lots of systems, and systems connecting to track what I was doing. But you know what? That's a guilty secret. I don't want everybody to know that. I shouldn't probably have mentioned it.
They do now.
Today, there's probably a problem there.
Yeah.
That was a galaxy that I don't want people to know about because I don't. So I don't want a universe. I want a set of galaxies. I have different personas. I play different roles. I have 5 email accounts. I have 6 Twitter accounts. Each of them doing very, very different things. I don't want everybody to see everything I do and know everything I do because I want a few secrets. And I think I may be an extreme, but I think there'll be many other people that will feel the same way.
Do you think that parlays into like product design as well? I mean, Tony, so I think things like different products for different parts of their lives, so different cards for different part of their lives, and those kind of things. I mean, is that something we're going to play with more?
No, absolutely. I think that's going back to say, we need to treat consumers as individuals, and what is the need of that consumer when they come to you, and what is the product that you've got available if you have the right product available for them. So, I mean, ultimately, what we want to be able to do is look at each individual and make sure we have something that is right for them. So it's I don't see why you can't. I mean, people do it in sort of gimmicky ways in terms of choose your own coloured card and etc. And the likes of Amex have always had it. You can be a super duper platinum customer if you do X and Y. So there's been those types of things going on for a while. Whether sort of the virtual reality stroke reality of the metaverse is something that, I mean, there's going to be elements of it. There's no question. I think there is, once you get into technology, there's crossovers, in many different areas that can translate into being able to use in a successful fintech way. And I think that's more likely in the short to medium term, that you take some of the elements that can be used to give the customer a really good experience of what you're doing. But I agree with Jason. Is your sort of elephant in the room is all that data, and if that data is going across different borders, never mind our border and staying within it. But once it goes to cross different borders and it doesn't have the protection of some of the things we have at the moment, it's not necessarily something to be, I think, too frightened about, because everything is possible in terms of everything can be contained. It's, I suppose, ultimately getting the right minds around it and also using it for the right reasons. And from our point of view, the right reasons would be, well, how do we engage with customers better? How do we give them better experience? And I think from that angle, I'd be interested. Well,
yeah, I suppose part of it is also about sort of like building relationships and keeping relationships with customers all the way through the journey. I mean, and Zach, bring you in on the conversation a little bit around. I mean, are you seeing that either as a way of doing it, or I mean, or what are the other sort of technologies you're sort of seeing sort of emerging from sort of keeping relationships with customers? I mean, sort of like in terms of like the ones you're looking at, the ones that are being most popular.
I haven't noticed anything crazy new that's popping up. I will say something that I forgot to mention earlier the last time that I spoke is kind of to piggyback off of the idea of virtual assistants, chatbots. That data, just to echo what Jason and Tony said, is stored and it follows you around. So personalization is a huge new, I wouldn't say like emerging. I mean, it's been out there, that capability, but it's something that, again, with the loss of a lot of face-to-face interactions with your favorite retailer, that's how we make up for it. Is a lot of times we have like those personalized email campaigns, outbound campaigns, SMS campaigns to get them into their whatever it is that they prefer. So we have a lot of personalization is probably the biggest option.
And is that has that developed over the last couple of years in terms of like becoming much more hyper-purpose personalized? And is that becoming a new generational expectation that it is going to be tailored to me as an individual, or versus these mass campaigns we used to run before?
Yeah, they used to just be these generic blasts, right? That would shotgun out to everyone, and they were about as generic as you could get. But yeah, they're becoming much more targeted. Like you said, that data it's been something we've been working with for the last few years. And really now we can get that down to a very targeted, specific template and get the right items out to the right customers.
And one of the things that's actually quite interesting is what's the interaction between channels in this case, but it can also be what's the interaction between products as well. So, and that's always been quite hard, hasn't it? It's almost like, well, if I do an SMS here, it might have an impact here on a call, or it might have an impact here on a letter. And it's like the combination of those becomes quite a complex problem to solve, but it can also be a combination of products as well. I mean, to broaden it.
That opens up potentially a whole other can of worms too when it comes to compliance. I know in the UK, you guys have the FCA and Ofcom, right, that you're working with. So regulations may be wildly different from here in the States, but I know that this might not be a coincidence. Maybe it is, but in October of 2021, we actually, the FDCPA and all those regulatory bodies here in the States had updated all of their consumer protection acts. So, you can't just spam emails along with phone calls, along with SMS any longer. It has to be a delicate combination of the few, and you can't exceed a certain volume per day, per week, and so on. So that's a fine, delicate line to walk there. If you're going to, you can't just shotgun out a campaign whenever you feel like any longer.
And what do you think the reaction is to that? Is the reactions that sort of drive greater segmentation, use of data to sort of like target it? I mean, is that what you've been seeing too?
Yeah, we have tools within our software that we provide as far as best time to contact. We number portability, something silly say I was born and raised on the East Coast, but then I moved out to the West Coast, but I kept my East Coast number, so the area code reflects a different time zone, right? So now, I mean, all of those things our software deciphers through, so it can target when the best time to call for you. That way you're not calling someone at what would be 8 a.m. East Coast time, but it turns out it's 5 a.m. like it is right now on the West Coast, and you're giving that person a very early wake-up call, which is cause for a compliance issue. Yeah. So it filters through all of that nonsense, and then it gets right to when is the best time to contact this customer, what is their preferred channel of choice, and then when to execute that campaign.
Yeah, I mean, Tony, you must be thinking about that in terms of like how to customize your product. Specifically around individuals. I mean, are there data streams that we've got to think about, or we're not currently thinking about, that you think that you already think about, or is it much more around the data you've already got?
I think that there's a number of things. I think it's making information available to the customer as well. I think there's we're talking about generations before, and I think there's a lot more interest from people in finding more information about. So I think a lot of it is having good knowledge bases within your system as well. For us, it'd be the app. So we'll hold a number of different knowledge bases. We can quickly answer people through chat. And again, I think it comes back to the most appropriate way, that the customer wants to engage with you. I mean, we can be busy fools emailing, a customer base that never responds just because it makes us feel good. And we've got all these emails out. But what you really want is an interaction with the customer. So what you've got to try and do is establish what is the best way of interacting with the customer. Obviously, being app-based and people have signed up for the app, the likelihood is that they're more than happy to communicate with through the app. And obviously there's a lot of clever ways of being able to respond quickly to customers now through the various AI and bots and etc. which you can involve. But then there's still a need on some occasions for the intervention of a human being if there's something that's needed. So I think it's a combination of things, but I think it's about easy accessibility. So making it easy for customers to access you, making it easy for customers to access information, so it doesn't become difficult to find something and they get frustrated. I mean, probably everybody's suffered the same frustration over the last 18 months. Every call centre you get, your first message is that you're going to have to wait a long time because COVID is on. Well, actually, we all know that COVID's on, and those messages are still now. So I think people have got to sort of get a bit cuter in terms of how their capabilities are in letting customers access them. And again, customers will want different things from that communication. Some customers, as I say, will if you can guide them towards where the information is, will be more than happy to sort of digest that information themselves. That's what they want to do. You'll get other customers that are more needy and that want to be able to get that instant sort of interaction with you, which again you can do through your sort of your chats, etc. And then it's about having the skills, both in terms of the machine learning, to be able to pick up, well, how important is this conversation? Where is this conversation leading? Am I picking up something that, that we should be aware of the customer here and should be responding to and reacting to? Going back to what I said earlier on about thoughtfulness, so making sure you're putting some thought into your interactions with your customers. And it doesn't also always have to be necessarily, for a financial point of view. You might find out something about the customer and be able to do something for that customer, whether it's signposting them somewhere, whether it's sending something, because you've thought about that interaction with the customer and you've been able to do something to support and help the customer as a result of that.
I mean, Zach, I was going to come back to you just, I suppose, in terms of getting hold of customers is often, you know, I mean, you mentioned right time to call earlier, which is like a little bit the way, from older days. But I mean, what are the latest thinking you've got around how to engage customers and how to get them to engage and get in contact with you, either in terms of, you know, it might be in terms of a lending decision, it might be in terms of like validation, it might even be in terms of like collections at the back end as well. I mean, what's your latest thinking in terms of like trying to get that engagement?
Well, it all comes down to personalization. Everyone's different. Everyone has different times of availability. Just because legally the best time to contact you is between the window of 9 a.m. and 7 p.m. doesn't mean that those are the hours that you work or that you're available necessarily. I mean, everyone's different. So it's just a means of establishing contact. I mean, at first it is a little bit of a guessing game as far as, hey, should we try this person on text? Should we try this person on email, phone? And then which ones have they responded to and which ones? Again, just to kind of piggyback off of everything that Jason and Tony have set up to this point, is it all comes down to that data, right? So once we have that little bit of data, when they are interacting you with it at a certain time, certain day, on a certain channel, all of that is logged. And of course, that's how we can continue to engage customers on their channel of choice. Their personalization and their customization for them that's the most important thing.
There's a question that's just come in here, which actually links to what I was going to lift on that in terms of customization. But then it's also around what are the customers' needs going to be? Was going to be the question I was going to ask, which is, you know, we talked a bit about you know, where we've come from, new technologies coming up, but what are customers looking for with lending today, and is there a new set of needs that's out there other than just as potential generational shifts? And then the question that came in is, what's predictions? What's the next lending trend after buy now, pay later? You know, what do we think is going to come next? I mean, so combine the two, and I suppose maybe Jason, get your view first from an industry point of view. Like, we talked a bit about embedded finance and salary finance, buy now, pay later. Still on mute, by the way. Still on mute, Jason.
Yeah. I'm not looking for I was saying that I'm not looking for a universe or a metaverse, but I am looking for more efficient galaxies where people are able to provide me with the products I need. I think it was a conversation we've been having. You know, I know there's a number of lenders have been having conversations over recent weeks and indeed months about coming out of COVID, and now with cost of living coming along as well. Is this the new normal, that we're going to have tough financial times, unpredictable financial times for the foreseeable future, and that foreseeable future being, you know, the next 5 years? Is that, and I think that's one of the things we were talking about, and about how does that impact on product, how does that impact on risk models, because we're not going to have that smooth period where we can work out averages and kind of work out, you know, it's going to we're going to have to build in to our products, we're going to have to build into our models the ability to move quickly and adapt quickly, because it does seem that we're going through a number of years where we're not getting that kind of normal, stable kind of market in which we operate. There will be new vulnerabilities that we need to be identifying. There are going to be new issues, and we need to have models that kind of impact that, and products that can be adaptable for that. Where's the next? I've no idea. Buy now, pay later came out and punched me in the face, just like Will Smith. So I have no idea what the next one is going to be honest. I would look outside of the regulated perimeter and see outside, is there something else happening out there, because that's probably where the next big piece of lending is going to come from.
Maybe we need to go back through the history books and look at old-fashioned ideas and see if they can be reinvented. I don't know. So,
absolutely. Televisions that appeared on weekly, you know, things like that. Yeah, absolutely.
Yeah. Tony, what's your view in terms of, I suppose, the next trends from you know, from and in particular from a customer point of view, because there's still a customer need there for borrowing, right, or to purchase things.
Yeah, and I think it could be a shift in people moving from more traditional sort of profiles, if you like, than we're aware of at the moment, because we know there has been changes in that in terms of people, sort of more people working from home. Therefore, there has been benefits to them there. You had people over the last 18 months that were managing on 75% of income, and have sort of been already through some tough times. And obviously it gets a bit compounded going forward, but at least hopefully they've got their income back. We've got a fairly stable workforce at the moment. But hovering around, as I said earlier on, you've got your Apples, you've got your Googles, you've got people like that who are not in a traditional financial space, who have obviously a really good understanding of how technology can support people, really good ways of getting people to use the technology. And it wouldn't be beyond the realms of possibility where competitors become collaborators, if you like. So where the big banks have to move their massive tankers with all their legacies, do the Apples and Googles take advantage of that and sort of start to step into some spaces they're not in at the moment. But generally speaking, I think for the everyday person, I think that there'll be a cross section of different needs. Where there'll still be people that will want to borrow for luxuries. There'll be at the other end people will borrowing for everyday emergencies. So I don't think that changes. Whether the size of those groups of people changes is probably more likely. And I agree with Jason. You've got to look ahead 3 or 4 years, because not only have we got the intense pressures on incomes at the moment, but we've got worldwide events that are happening as well that we don't know really what the impact of those are. Take Germany for example, who are moving completely away from Russia, potentially a massive cost to the consumers in Germany, and we may have to face similar things in terms of being able to stand on our own 2 feet as a country as well, which again could impact on the population as well. So I think we're in a very turbulent times in terms of really being able to strongly predict anything, because there's a lot of things that are uncontrollable to the everyday person at the moment. But I don't think that takes away the need for people to want to borrow. Our economy is built on that sort of ethos where people can borrow to get what they want. What you would hope is that the way lenders will build their products are suitable for the times that are there, and ensure that we support customers in the right ways, if you like. So that anything we do is sustainable and it's not for a one-off purpose.
Yeah, it does feel like there's been quite a period of instability that we're going to have to adapt to, doesn't it?
Exactly.
And sort of build that going forward. I mean, and I suppose just to close off, because we're also at time, and Zach, I mean, I get your view around 5 emerging technologies maybe around that we've got to do to react to the new environment. I mean, are there things that you think we've got to really watch out for?
Yeah, we're low on the new technology side. I mean, other than maybe engaging them in a campaign. I mean, I'm trying to think of this from a lending perspective, but engaging them in ways that maybe they haven't regarding that industry before. I mean, it's not every day you're reached out to by text message, right, from a lender, or I think something voice to voice or email is something a little bit more professional. How many people apply for a loan through like a mobile app, for example, right? I mean, that's something that I'm sure exists, but it's certainly not that common. So not a lot of emerging technologies, at least on the contact center side, in regards to a lending context. Unfortunately, I don't have a great answer for you, Chris.
That's okay. Well, thanks very much, everyone, for joining. We do have a question that's just come in. So do you think there could be better synergy between lending and collections? So maybe just deal with that just before we head off. So we talked a lot about lending, and the focus here is on lending. Obviously, there's the collections piece as well. I mean, do you think there's better synergies that we can look, looking at the whole of the life cycle? If one of you guys want to take that.
Yeah, sure. I think there's more synergies than people realise. I think there's the relationship between lending and collections is quite different than it was sort of 10 years ago. A lot of companies have good solid partnerships with digital collection companies currently. There's a lot of in the collection where there have been good adopters of and quite right so, because their main focus has been able to contact people, or given the people the opportunity through self-serve to take some of the pressure off, or take the pressure off being able to do those income expenditures easily by introducing, access through open banking, etc. So I think I don't think we're a million miles apart in terms of how we approach things. Obviously, the every time we sort of lend to somebody, the aim is to collect it back. So that is always at the forefront in terms of you're sort of on board and what happens during the life cycle of the customer, and a big part of that life cycle of the customer is the collection side. And so the communication, giving customer access to good information, giving customer access to different ways of making payments, as we've said earlier on, there's many different ways of payment today, and we shouldn't restrict that access to customers. Make it as easy as possible for them to do these things, and I see that happening all around the collection world.
Yeah, I totally agree. I think that the collection side internally within an organization, well, of course, consumer duty will be one of the reasons why. I mean, we should have always been looking at this, but consumer duty will kind of be another reason why you should look at that. And if you're looking to work with external organizations in terms of collection, then I think there's a need for you to work with people that understand your customer as well. Look for organizations that understand the attributes of your customer, any particular vulnerabilities they should be looking for, how to communicate, what kind of communication they are comfortable with, and all of that has to be done with a partner. Is a partnership that kind of understands your customer base as well. So there needs more discussion for that to happen, for you both to kind of understand what's happening and how that partnership works. And I think we're already seeing some of that. Tony's right. I think when we're so far from where we were a decade ago, even 5 years ago, we are at a different space, and it kind of changes every day and gets better every day. And I think consumer duty might kind of be another reason to have another look at it as well, which will be good, which is one benefit of the consumer duty.
That's good. Well, everyone, thank you very much. So Jason, Tony and Zach, thanks very much for joining us. So really appreciate it. It was a very interesting discussion, and thanks for the engagement. I think some great topics we covered there, so I really appreciate it. So thank you very much. I'm going to hand back to Colin.
Thanks, Chris. Brilliant. Really another great panel and good event as well. Really appreciate everybody who's been involved today. It's been really interesting, certainly as a viewer from my perspective and a presenter as well. So no, it's been really good. Just wanted to round up really and thank our today's sponsors, Alvaria, Webio and Lyseco provided a bit of support as well on this event. So thanks to those guys. Without them, we wouldn't have these events. And obviously a massive thank you to our speakers today, who are lists here for you. If you want to look back and see some of these speakers in action, then this event has been recorded, so we'll be sharing this on YouTube at some point as well. But reruns are available if you've registered, so we hope you very much enjoyed the day. Share your thoughts and feedback via LinkedIn and Twitter would be great. Also, wanted to say that we will be sharing a write-up with some of the questions that we didn't quite get through today on our website next week. So that will be interesting to people as well, hopefully. So have a look at that next week. Moving forward, we've got a number of events coming up over the next, until the end of this year. So for those of you interested in commercial business collections and credit management, we've got an event on Tuesday, 16th of June. Those details will be shared soon. On the 7th of July, we've got our collections online event as well. And then 13th September, we'll be hopefully running another lending technology think tank. We'll round off the year face to face. Hopefully, COVID numbers will be down at some point in the future. We're running our face-to-face event the Thursday, 17th of November at the Midland Hotel in Manchester, where we will have a think tank talking about lending and collections. We try and cover both on that one. And then we finish up with, in the evening, our Credit and Collections Technology Awards of 6th year this year. So it'd be great to see people at those events if you can make it. But I'd like to end, obviously, by thanking Jason, Tony and Zach for that last session, and of course our star of the day, Chris Warburton, for his stellar efforts in presenting the event. It's been a really great event from that perspective, and to share it is even harder, so well done. And special efforts as well, mentions to Zach for getting up at an unsightly time in the US. He looks very fresh, so great for that. And of course, Jason, happy birthday.
Yeah.
So yes, anybody wants to buy Jason a belated birthday present later on the year can do so. So I certainly will be. I'll end up with a drink soon. So yeah, brilliant, excellent. Thanks everybody. We'll say goodbye for now. Thanks a lot. Goodbye.
Thanks.
Cheers, mate.